Hey, everyone, and welcome to this deep dive where we're going to get into building generational wealth
Okay.
through smart stock investments.
Sounds good.
So we're looking at an article from the Motley Fool about two companies they think are going to do really well in the long run.
All right. Always interesting to see what the Motley Fool's got their eye on for long-term growth.
Yeah, for sure. So first up is Walmart.
Okay.
And I know what you're thinking, Walmart for generational wealth.
Yeah.
But stick with me here.
Right.
The Motley Fool's saying that they've got this history of making millionaires.
Mm.
And their recent performance kind of shows they're not slowing down.
Okay, I'm curious about this because Walmart, yeah, they're huge, but explosive growth isn't what comes to mind first.
Right. Yeah.
So what kind of performance numbers are we talking about?
Well, their customer traffic is up 4%.
Okay.
And it's not just people looking for bargains.
All right.
They're getting like a mix of shoppers, value conscious and higher income too.
Okay.
And people are spending like 1% more every visit.
Oh.
But the big thing, their e-commerce sales jumped 22%.
Wow, 22% in e-commerce. That's pretty impressive these days.
Yeah.
Especially with, everything going on in the economy.
Right.
So it seems like they're really tapping into that shift to buying online. But it's a tough space out there.
Yeah.
How are they standing out from the competition? I mean, especially compared to like Amazon.
Yeah, that's a really good question. And this is where it gets really interesting.
Okay.
They're not just, riding the e-commerce wave.
Right.
They're like shaping it.
Mm-hmm.
They're putting a lot of money into their online stuff.
Okay.
And they're building their own digital advertising network.
Mm.
Kind of like Amazon's got.
Oh, so they're trying to kind of copy what Amazon's doing with that? That's
Yeah.
pretty ambitious.
Yeah.
It's definitely risky. Amazon's been doing it for years.
Yeah.
They've got all this data and this crazy algorithm.
Right.
Can Walmart really pull it off?
Right.
Or are they going to just be trying to catch up to a giant?
Yeah.
That's a big question for investors.
For sure, something to watch. Now, another thing the article talks about is Walmart's dividend yield.
Okay.
It's under 1% right now,
Okay.
which might seem low to some people.
Yeah, true. Especially if you're looking for some income from your investments.
Right.
But there's probably a reason why it's so low.
Exactly.
Uh-huh.
They're putting those profits right back into the business to make it grow.
Okay.
So that's like a trade-off. Less cash in your pocket now, but maybe much bigger gains later when all those investments start paying off.
Yeah, it's that classic, plant a seed now for a whole forest later.
Yeah.
Really fits with the whole generational wealth idea.
Right.
You got to be patient and think long term.
Yeah.
But you also got to trust that the company knows what it's doing with all that money.
Exactly.
Yeah.
All right. Ready to move on to the second stock?
Yeah, let's hear it.
Okay. So the Motley Fool's next pick is McCormick.
McCormick. Interesting.
Yeah, they've been having a bit of a rough time lately.
Yeah, I was going to say they're a household name, but I haven't heard the best things about them lately.
Yeah, but the article is saying that their long-term potential is still really strong.
Okay, so what's making the Motley Fool so optimistic about them?
It basically comes down to McCormick owns the spice rack.
Okay.
They've got Cholula Old Bay Frenches.
Right.
These brands that are like staples in kitchens everywhere.
Yeah.
That kind of market dominance is a big advantage.
Yeah, for sure. Brand recognition and market share are super important.
Yeah.
Especially when you're talking about, everyday products.
Right.
But just having a strong brand doesn't guarantee success.
Right.
How has McCormick been dealing with all the, rising costs and supply chain stuff?
Yeah.
Have they been able to stay profitable?
Well, that's where it gets interesting.
Okay.
They have stayed profitable, but they had to raise prices, which has kind of slowed down their growth.
Right.
But their latest quarterly report shows that they're back to growing globally in terms of volume.
Okay.
And their average selling prices have actually gone down a little bit.
So that's a good sign, right? If they can keep costs down and keep selling more,
Yeah.
that could mean a big comeback.
Yeah.
It sounds like maybe the worst is over for them.
Yeah.
But one good quarter doesn't mean everything's fixed.
Right.
It's still early.
Right.
We'll see if they can keep it up.
Yeah. Now, here's where the Motley Fool makes a really interesting comparison.
Okay.
They're putting McCormick up against PepsiCo.
Huh.
PepsiCo might be growing faster and has a higher dividend yield right now.
That's right.
But they're saying that McCormick's focus on flavor
Okay.
could mean bigger gains in the long run.
That's interesting. PepsiCo's huge. So many different products.
Right.
And McCormick is just doing their thing with flavor.
Yeah.
Makes you think, is it better to be everywhere or is it better to be the best at one thing?
Yeah.
tough question.
It is.
PepsiCo, they might be more stable,
Right.
but McCormick could really dominate their market.
Right.
It's like a classic trade-off. Depends on how much risk you want to take
Right.
and what your goals are as an investor.
Yeah. If you're looking for stability and income,
Yeah.
PepsiCo might be a better choice.
But
if you think McCormick's going to really capitalize on their market
right.
and deliver huge returns over time, then maybe it's worth taking a little more risk.
Exactly.
So we've got two very different companies here,
Yeah.
both with good arguments for why they could be good long-term investments.
Mm-hmm.
But what I find interesting is that they both kind of touch on the same basic principle of investing for generational wealth.
Yeah, I see what you mean. It's like even though these companies seem totally different,
Yeah.
they're both examples of how important it is to find companies that are not just, following trends, but actually creating them.
Yeah.
Walmart with their online push and that advertising thing.
Right.
And McCormick with their focus on becoming even bigger in the flavor world.
Exactly. It's not just about companies that are doing well today. It's about the ones that are going to thrive in the future.
Yeah.
And that's what's key for anyone who wants to build wealth that lasts for generations.
Absolutely.
So
Yeah.
we've got
Yeah.
two really interesting companies to think about,
Right.
both with the potential to
Yeah.
be really good
Yeah.
long-term investments.
That's
And we've kind of touched on
Yeah.
some of the key principles of building generational wealth.
Definitely.
We've talked about, being patient and thinking long-term,
Yeah.
choosing companies that are going to shape the future,
Right.
and, finding a balance between risk and reward.
Absolutely.
So
Yeah.
a lot to consider.
A lot to think about.
But I think we're off to a good start.
Yeah, for sure.
We got some great insights from the Motley Fool.
Yeah.
And we're starting to see how these principles can be applied to real companies.
Absolutely.
So I'm excited to keep digging into this
Me too.
and see what else we can learn.
Yeah, sounds good. Yeah, it's really interesting how both these companies, even though they're in such different areas,
Right.
kind of show how important it is to, change with the times.
Yeah.
But let's go back to Walmart for a sec. You said their customer traffic is up. But what I find really interesting is that they're attracting both the bargain hunters and the folks with more money to spend.
Yeah.
How are they managing to appeal to, everyone?
It's a pretty smart strategy. They've kind of gotten rid of that, cheap image.
Right.
And positioned themselves as like a one-stop shop for everybody. They've brought in more premium brands and organic stuff.
Okay.
But they've kept their prices competitive on the everyday things people need.
So they're catering to a wider range of shoppers.
Yeah.
That's got to be important these days.
Yeah.
Everyone's got so many choices.
Right.
But it's not just about what they sell, right?
Right.
What else are they doing to, keep people coming back?
Yeah, you're right. It's not just about the products. They've put a lot of money into making their stores nicer,
Okay.
brighter, cleaner, more inviting. And they've also done a lot to connect their online and offline stuff.
Okay.
So you can do things like curbside pickup and same-day delivery.
That makes sense. People want everything to be easy and convenient.
Yeah, exactly.
Sounds like Walmart's doing a good job of keeping up with that.
Yeah.
But what about that digital advertising thing?
Yeah.
I think they can really take on Amazon.
It's a tough battle for sure.
Right.
But Walmart's got a few things going for them.
Like what?
Well, first, they've got a ton of data on their customers,
Right.
which is like gold for advertising.
Yeah.
They know what people are buying, how much they're spending,
Okay.
what they like.
Right.
And second, they've got stores everywhere,
Yeah, that's true.
which means they can target ads based on where people are
Yeah.
and, what kind of people live in that area.
Okay, so they've definitely got the size and the data to be a big player in advertising. But Amazon's got a big head start.
Right.
And their platform is super advanced. It's
Yeah.
really tied in with all their other stuff.
Right.
So it'll be interesting to see if Walmart can do something different.
Yeah.
Something that'll make advertisers want to switch from Amazon.
Yeah, definitely something to watch.
Mm-hmm.
It could really affect Walmart's profits and growth in the long run.
For sure. Okay, so we talked about Walmart's challenges.
Yeah.
Now, what about McCormick?
Yeah.
You mentioned their last report had some good news in it.
Right.
What was that all about?
Well, the main thing was they started growing globally again in terms of sales volume.
Okay, so that means they're selling more stuff,
Yeah.
which is good.
Yeah. It seems like all their work to, manage costs and get their prices right is starting to pay off.
Okay.
And people are buying those McCormick brands again.
That's good because their sales had been going down for a while.
Yeah.
But I'm a little confused. They lowered their prices, right?
Yeah.
Doesn't that seem kind of weird if you're trying to make more money?
It might seem that way,
Yeah.
but it could actually be a smart move.
How so?
Well, by making their products a little cheaper,
Yep.
they could attract people who are, really watching their spending,
Right.
who might have gone with a cheaper brand otherwise.
Okay.
And if they sell more because of that,
Right.
it could actually boost their profits overall.
So it's all about finding the right balance between price and how much you sell,
Right.
so you can make the most money without losing customers.
Exactly.
Yeah.
But speaking of smart moves, remember how the Motley Fool compared McCormick to PepsiCo?
Uh-huh.
They said PepsiCo might seem like a safer bet
Yeah.
because they're growing faster and have a higher dividend yield.
Right.
But McCormick's focus on just flavor could lead to bigger wins in the long run.
Yeah, it's a really interesting comparison.
Yeah.
It shows how there are different ways to grow over time.
Right.
PepsiCo, they're like everywhere.
Right.
Drink snacks, breakfast cereal. That makes them really stable.
Right.
If one thing doesn't do well,
Yeah.
something else probably will.
Right.
But because they're focused on so many things,
Yeah.
they might not be the absolute best at any one thing.
Right. That's a good point.
And that's where McCormick comes in.
Right.
They know flavor.
Yeah.
They've got all these brands that people love.
Yeah.
They're not just selling spices. They're selling like experiences
Right.
and memories.
Yeah.
That kind of loyalty is really valuable.
Yeah.
And it can lead to big growth over time.
Yeah.
Even if it doesn't happen overnight.
Right. So PepsiCo might be better for people who want steady returns and dividends,
Uh-huh.
but McCormick could be better for people who are okay with a little more risk.
Yeah. And who believe in their ability to really dominate the flavor market.
Exactly. So much to think about.
I know. It's tough to know what companies are going to be successful so far into the future.
Yeah. What advice would you give to someone who's just starting out?
Well, you got to be patient and disciplined.
Yeah.
And you got to be willing to learn and adapt.
Right.
I always tell people to focus on the basics.
Okay.
Look for companies that have a history of making money innovating
Okay.
and, rewarding their shareholders.
Okay.
Don't get caught up in all the hype.
Right.
Invest in companies that are building something that's going to last.
Yeah.
Solving real problems.
Okay.
Making things that people are going to need and want for years to come.
So don't just chase the latest trends.
Right. Exactly.
Yeah.
It's about playing the long game.
Yeah. But it's not just about picking the right stocks.
Right. No, it's not just about stocks.
Okay.
It's about saving money, managing debt,
Right.
planning for the future.
Okay.
It's about building a strong financial foundation that can handle whatever the market throws at you.
Right.
And that can provide security and opportunities for generations to come.
Okay. So it's really a holistic approach.
Yeah, it's about the whole picture.
This has been so insightful. I
Yeah.
feel like we've barely scratched the surface, though.
Yeah, there's always more to learn.
Right? Our listeners are probably wondering how to actually find those companies that'll be the foundation of their generational wealth portfolio.
Yeah, it can definitely feel overwhelming. Where do you even start?
Exactly.
Well, it all starts with being curious
Okay.
and being willing to look beyond the obvious.
Right.
You got to think about those big trends we talked about,
Right.
the things that are shaping the world and will keep doing so for a long time.
Okay, so like technological advancements.
Yeah,
Changes in how people shop
right.
and, how the population is changing.
Exactly. Those are all big forces that are going to have a huge impact on the future.
Okay, but how do we turn those big trends into actual investment ideas?
It's all about connecting the dots.
Okay.
Like, let's take tech advancements, for example.
Okay.
We're seeing crazy stuff happening with AI, renewable energy, personalized healthcare.
Right.
These things could completely change entire industries
Yeah.
and make a lot of money for people who invest in the right places.
So it's not just about finding the companies that are making these new technologies.
Right.
It's about finding the ones that are figuring out how to use them in a way that makes sense and makes money.
Exactly. Think about the companies that are using AI to work smarter, cut costs, and create new stuff.
Okay.
Or the ones that are finding new ways to store and deliver renewable energy. Those are the companies that are probably going to be leading the next wave of growth.
That makes sense. But that sounds pretty complicated.
Yeah.
What about people who aren't, tech experts?
Right.
Or who don't want to invest in something super risky?
You don't have to be a tech whiz to take advantage of these trends.
Okay.
Look for companies that are already doing well,
Right.
but that are also adapting to these changes and using new tech in their business.
Okay.
Like retailers that are using e-commerce and data to give people a more personalized shopping experience.
Right.
Or manufacturers that are using robots and automation to make things more efficiently.
So it's about finding companies that are thinking ahead and embracing innovation no matter what industry they're in.
Exactly. And don't forget the fundamentals.
Right.
Strong brands,
Uh-huh.
market dominance, a
Okay.
history of innovation,
Right.
solid financials.
Okay.
These are the things that usually mean a company is going to be around for a while.
Okay. So we're looking
Yeah.
for those companies that are not just surviving, but really thriving.
Exactly. And don't forget about the management team.
Right.
Are they experienced, ethical, and forward thinking?
Okay.
Do they have a clear plan for the future and a track record of making things happen?
Right.
A great company is only as good as the people running it.
Makes sense.
Yeah.
If we're talking about investing for generations,
Yeah.
we want to know the company's in good hands.
Right.
But with all this focus on research and numbers, it's easy to get lost in the details.
Yeah, you're right.
And forget about the big picture.
Data and analysis are important.
Right.
But you also better trust your gut
Okay.
and be willing to think outside the box. Some of the best investments are in companies that other people haven't noticed yet.
So we need to find that balance between the numbers and our intuition.
Exactly. Don't be afraid to challenge the status quo.
Okay.
And look for those hidden gems.
All right.
Read a lot. Talk to experts. Stay curious.
Okay.
The more you know,
Yeah.
better decisions you'll make.
This deep dive has given us a lot to think about.
It has.
Any final thoughts for our listeners as they start their own journey towards generational wealth?
Remember, it's a marathon, not a sprint.
Okay.
Be patient. Be disciplined. Think long term.
Right.
Don't let the ups and downs of the market freak you out.
Okay.
Stay focused on your goals.
Right.
Spread your investments around and keep learning.
Okay.
But most importantly, remember that the best thing you can build is knowledge and wisdom.
Right.
That's what you pass on to future generations.
That's a great point.
Yeah.
Well, thanks for joining us on this deep dive.
It's been fun.
And to all our listeners, happy investing.